this on? Yeah. Okay. Hello, hello.
Hello.
Hey guys, hope everyone got something to eat. I'm Catie. I'm the founder and CEO of Babs. We are a data-driven marketing and growth and PR firm for Web3. And we're going to be talking a little bit about, that's not the right topic, but we're going to be talking about something else. From consensus to, what is it? Capital to consensus in Web3, correct? There we go. So welcome to the stage, my co-panelists, and I'll let them do their own intro, and then we'll get the conversation started. You want to start?
Thank you. I love the topic, not...
This topic or the other, our real topic?
But the real topic, what we'll be discussing, I'm excited about.
Okay.
My name is Messele. I'm from Pillar Project, which is one of the earlier wallets in the space, and Etherspot, an infrastructure for account abstraction and chain abstraction, which is interoperability across chains.
Hi everyone, my name is Przemek, Kowalczyk. I co-founded Ramp Network. We on-ramp and off-ramp millions of users to wallets over the last 7 years.
Awesome, and really good to meet you guys. I'm Sid. I'm a director at Areta. We're an investment banking firm exclusively focused on the digital asset space. So we do everything from M&A, capital raises, secondaries transactions, token capital markets, and market maker advisory and strategic projects with crypto protocols, foundations, etc. So yeah, great to be on this panel.
Thanks, guys. Great to meet you all, and thanks for the intro. Okay, so here's our real title. Let's back up. I think one of the first questions I wanted to ask you guys, because all of you have different backgrounds, and we're kind of talking about the progression of the Web3 stack. I wanted to get each of your opinion a bit on where we are right now. What is kind of the most important layer that you're seeing within each of your verticals and each of your projects? Michael, you want to start?
Yeah, from my perspective, I mean, where we are right now is still in the building phase. The foundations maybe are set up. It's just like the skyscraper, the foundation is built, and we're building skyscrapers, but what we want is to have a shopping mall with a lot of shops, a lot of bars, and a lot of people to come in. However, we're nowhere near that. What we are doing is, in putting up the skyscraper, we're saying, you know what? This one needs a lift. At the back, it needs a goods lift. Oh, actually, we need to have escalators built into this one. Because then the shops would come in, then the restaurant would come in. So in our case, we're building account abstraction solutions, meaning you don't need to know about your seed phrase. You can just log in using your emails. You don't need to know about the gas price. That's what account abstraction gives. And you need to have a one-click action. Instead of signing so many times to do one simple thing, what if I can just sign once and it is done for me? That's what the account abstraction does for you. The chain interoperability, which is the chain abstraction, then is the next step, again, what we're working on, which says, hang on a minute, I've got an asset on chain whatever. But why do I have to know about all the other chains and get their native tokens, this, that, and the other? As much as I do not know how many databases there are in Facebook when I post a message, or on X. I don't know how many databases they have. I don't really care to know. So why should I know whether you're using this blockchain or that blockchain? So the chain abstraction does that for you. Maybe you need a stable coin, but as soon as you have that, you can swap any asset on any chain. So these are the frameworks, the building blocks that we need then to be able to get those killer apps that would resonate with the masses.
Absolutely. Do you want to add?
So from my perspective, it's a bit different. So I actually believe that we are on the brink of something very big, and I think we are not yet fully recognized that the stablecoins in their current form are already good enough to put in the hands of billions of users. both on the retail and on the B2B side. And I think this is something that we see the first traction, we see the first signals, and I think we are no longer at the phase where we need that we're just building a very deep foundation, but actually we are at the phase of finally putting the tools that we built into the hands of the users. And I think the users will benefit tremendously over the next years because this new wave of stablecoins is gonna change the world, change how we think about digital cash, how we think about moving money cross-border, and it's gonna help millions of users around the world.
Awesome. And yeah, I actually land right in the middle of what you guys have said, and it's actually, if you zoom out a second and look at the last cycle, right? What was the biggest issue in the last cycle? It was that we had infrastructure limits. We had issues where there were so many users who actually wanted to try and use these blockchains, or at least at the time it felt like that. But we had so many issues with UI, UX, usability. People couldn't actually use the blockchains the way that they were meant to be used. So what did we do? We started focusing on building up that infrastructure layer, that stack, and on actually solidifying blockchains and the surrounding technology enough to actually be able to for users to actually use these things the way they're meant to be. So that's what what Michael's focusing on, and that's a lot of the work that's being done in the background. But then there are certain use cases, and the way that I look at this space is also, if you zoom out again, there's many different types of verticals and use cases. And if you've got things like stablecoins, which have reached escape velocity, and there's that's something that is really got into the, if you think about things in terms of the Gartner hype cycle, it's actually got into the level where it's reached mainstream adoption, and it will power payments and global finance going forward. So there are certain use cases that are ready for explosion or have already exploded. There are certain use cases that will take some time for them to develop. In the meantime, the infrastructure will continue to get stronger and stronger and more supportive. And from our perspective as well, when we look at the M&A space, a lot of what we see is that a lot of consolidation tends to occur in areas that are quite saturated, or where there's lots of different kinds of companies and there can be only a few winners. And those are the areas that actually tend to become more and more mature. So we are seeing that, you can see that in the exchanges space. There's so many crypto exchanges. You can see that within, market makers, for example. You can see that within the stablecoin space, and that will continue to happen, cycle or not. So yeah, I think in some areas we're in a build phase, in some areas we're in a explode to the mainstream phase.
Yeah, and just adding on to that, so you're saying that we're kind of on the precipice of something big. You're seeing, I think what we also see sometimes in a bear is we do see more of an increase in M&A because a lot of projects tend to be very similar, so the easiest thing to do is to consolidate. What would you say if we're talking about Web3 innovation as a pendulum? Right now, what is this next big thing that we're going to see, one, and is it going to be a coming together of M&A, or is it going to be kind of one vertical exploding? What do you guys see, where do you see those tendencies going from here, maybe to the end of the year or here to the next 6 months?
So I think M&A definitely will play an important role in the evolution of the space. It also, a lot of projects within the space require access to capital. The capital allocators require returns. M&A affords you with actual returns, actual exit liquidity for founders. It's a way to actually realize return on your investments. So in certain verticals, you will see that. In terms of, the cycles and how that happens, from a personal perspective, I think that, it's quite difficult to predict these things. Everyone says, oh yeah, you're gonna, in terms of the market itself, oh, everyone's gonna sell in October, everyone's gonna sell in November or December. I mean, that's not something that I can predict or that we even try to even,
no financial
not
advice.
At all, no financial advice. Like it's not even, something that I or we think about, right? But if you think about broader trends, there are certain areas where, like stable coins, like exchanges, market makers, some of the infrastructure behind the industry that is becoming more and more mature, saturated, and ready to consolidate.
What are you feeling is kind of the next big thing, at least in what you're working on?
Yeah, I mean, For me, the key transition that we're observing right now is the change of the key use case that users around the world will be why they are using crypto. So for the last years, the main driver was investment speculation. Basically, in some cases, that was basically a crypto casino, like the token casino that people were just playing, trying to get rich quick, which is, fine in itself. Like, this is the natural people motivation to everyone wants to make money. This is nothing bad about it. But it was not creating the inherent value in the end for people on the ground. And what we're seeing right now is that this use case is from this pure investment speculation moving towards the money movement. And this is something what we hoped within the Web3 industry to happen for the last 10 years. Like there's like the first famous case of buying pizza with bitcoins 10 years ago. Like, I don't know how much it's worth right now. It's like millions of dollars. But like back then already we had this wish that the crypto industry is going to be used for moving money, for transferring value from one person to another person, from one person to business. And I think this is something what we're going to see, and this is something what already we start to observe. And that's for me, this is the most exciting thing that I saw in the Web3 industry for the last years. Like that it actually can happen, and that it will happen.
Yeah. Michael?
Pretty much echoing on what they said. It is about solving real problems, not just speculating on tokens and APIs, but having a solution. Say, I have seen, we've worked and collaborated with big entities that are using telecom towers as AI compute, making that available as a dip-in, or real-world asset projects. Basically, things that have revenue stream by themselves, not just speculating on the token, seem to be gaining some foothold. So whether they will be ballooning in the next 6 months, or I hope they will, but we are seeing some signs of that. But usability matters still. When the users come, they do not want to keep, oh, this is my recovery phrase. You're not going to get that once you are getting mass adoption from the average person. It better be as usable as Web2.
Yeah, and if we talk about mass adoption, I mean, I think we've been saying this for whoever's been in the space for a while, forever. And especially with payments, not knowing your seed phrase, all of these different things. What do you think in terms of users in the spaces that you guys are in? Are those the biggest hurdles or boundaries to get people into Web3? Is it really simple user interface, UX, UI, or is it something deeper in your experience?
I mean, you have to have a killer app, but for you to be able to get a killer app that connects with people, you have to have the infrastructure to make that killer app. Just the analogy I gave you earlier on, you have a nice, beautiful skyscraper, but for me to have a shop, I need to have a lift, a goods lift, a people's lift, escalators. If you don't have them, and if you're saying, oh, the users, it's just only 5 flights of stairs, walk it up, you're not going to catch it. So for us to be able to get the shops in the skyscraper, we need to have the infrastructure. And
yeah, I think there's quite a lot of users gravitating towards apps that have found product market fit, right? So there's a few apps, and people kind of gloss over it or don't really focus on it because it's not the it's something that requires one layer deeper of analysis, but there's quite a lot of projects that are actually making sustainable revenue right now. You see the likes of Aave, you see the likes of Uniswap. They have consistent, they have consistent users, they have consistent revenue, and that's because they've essentially, created a bit of a moat around themselves, and they've actually integrated with multiple different chains, and they've actually been able to gain that level of product market fit where users actually find it relatively easy to use them. They've gone on and made some institutional partnerships where they just abstracted away and they're in the back end. And again, if you look back, the promise of blockchain technology, at least for me and when I started out, was that it would rewire the broken plumbing of financial services. And some of these apps, on-chain finance, actually to do that. And that's kind of the goal that we need to get towards. So for example, if you think about fintechs, you've got not too far away, you've got Revolut. Now, if you've got, so many different types of, if you've got Revolut users who are actually able to access, borrowing stablecoins on chain using something like an Aave and get, just the returns packaged up in the back end, very easy for Revolut to tap into that. And now these players are actually exploring these partnerships. And, over time, that kind of abstraction and that kind of, okay, DeFi, the whole DeFi mullet ideology, that will actually come to fruition over the next few years, and it's already started to happen if you look in the right places.
Do you think that capital is flowing in that same trajectory? I mean, are we seeing, a lot of times I see certain projects get investment, and I think, how did they get investment, and how didn't this, coming from the user side, right? I'm seeing projects come to me looking to get user acquisition, and I think this is what I would use as a user, as a retail user. But then you see capital going to projects that you don't quite understand. Do you think that the capital inflow is aligned with what the user or the consumer, I guess, roadmap looks like?
He's the investment banker, so
Well, are you getting investment? I guess that's the question too.
No, I mean, I do see at least the trend a little bit changing in that less investment, but with bigger ticket size on more infrastructure. Because the argument is, you can, if there is a gold rush, you can put a bet on, is it this plot of land that would get it, or that plot of land, or you can sell the whole lot of them, picks and shovels, because you're the infrastructure. So some of the investments I see is people that are thinking, this is the building blocks, the TCP/IP layer or the HTTP protocol for this ecosystem. So let's put money into that. We may not get the returns immediately, but it's a long term. So how do we check the team, their capabilities, their track record, and so forth? But I do sense to see some of those, but not 100%, but
Right.
a tendency.
I think we see over the years, I think, general rationalization, after all, in the investments. So when we started, years ago, the completely wild and extreme projects got funded, and without much prep, like just two, three guys sitting in their garage and just thinking over something over the weekend, and just on the paper, they got a couple of millions. Things like that happened, and but I think with time, investors and founders, like, they upped in game, and I think now it's like, you still can see some kind of irregularities that you mentioned, but I think it's better than it was before. So, like, that's my perspective.
And yeah, I think investors also look to kind of capture trend or meta. You can see, so for example, many investors might be investing in deepen projects because as a service category or as a vertical, they think that that's something that is going to, do very well over the longer time period. And they just need to find, I mean, if you think about investment philosophy, you need to find that one diamond in the rough. And, you end up investing in many things that might not make a lot of sense. So if you view it with that kind of perspective,
Making bets.
Yeah, you're kind of making just a bet. Sometimes they might be calculated, sometimes they might be FOMO, but overall you think that a certain sector is going to do well because that's what a lot of other people do, and you get into certain levels of groupthink, and then you've got later stage investments as well. So right now you're seeing prediction markets, and prediction markets have been around in crypto since 2014. I mean, I don't know if anyone remembers Ogre, but that was that was a very old prediction market that didn't actually work out, and now the infrastructure is improved, the user experience has improved, Polymarket, Catie, like, they're all doing very well, and so obviously people want to capitalize on those trends. So a lot of it can be about trends, a lot of it can be about finding that one investment that does supremely well and makes up for the entire portfolio. So yeah, there is obviously rationalization, but it is also about picking your bets as an investor and saying, okay, I know more about this sector, so I'll invest, or I just think that this sector overall has very good tailwinds for the next cycle. So I'll invest in, a few projects that seem to make sense at an early stage.
But do you ever worry about saturation then? So right now, I think stablecoins is a huge conversation. How many wallets are there out there? All of these things. So when does it become trend and when does it become saturation?
Just to finish, one more thought on financing. I think actually the movements on the M&A side, so for example, the Stripe acquiring Bridge for $1 billion, it's one of those that actually is a very good signal because it shows that Web2 businesses actually, they start to treat Web3 as something serious, like something that's can potentially threaten their monopoly on their position on some of the financial services that they're offering today. So I just want to say that those movements from their side, I think it's a great signal that they are seeing the same thing that we're saying right now, that the next few years are going to be very exciting.
Yeah. Yeah, and I think if kind of going on that theme a little bit in terms of what just happened with AWS, right? So the system went down, and that also meant that crypto went down. So that means we're not truly decentralized yet. So then, do you think that a lot of these big Web2 companies, that's my thesis, maybe you'll disagree with me, but do you think that a lot of these big Web2 companies like AWS is going to have to adopt a Web3 option, or are they going to try and do it in-house? What are you guys seeing?
I actually think that for most of the cases, this is not that major thing as we are making out of it. So why we have decentralization? Decentralization is not about the 100% uptime. Like if you want to have 100% uptime, you just you have that. You have the service in GCP and AWS, for example, and Azure, or whatever multi-region deployments. Like there's other options to achieve that. The decentralization is about security. The decentralization is about making those chains secure, that no one can take over your funds. Were the chains secure? Yes, they still are secure, and I think that's where the decentralization matters, and it also matters in terms of the attack vectors. So if you have for example, very organized crime or state attacker, then naturally you want to think about how we decentralize the system, but it's not about 100% uptime. And Ethereum still worked.
Sorry.
No, Michael, go on.
I look at it in two parts. The first part is, yes, being able to use the likes of AWS, especially nowadays when we speak to whether institutional customers or even Web3 big clients, they even ask us for service level agreements. So you have to provide the services 99.9% of the time up this, that, and the other. So then using those reputable services does help you. And also, when you talk with the institutionals, they're not least worried about decentralization. They want to gain efficiency. Efficiency in what they do, whether it is a supply chain being on ledger or RWA property being managed or sold, then they can see the money within minutes as opposed to days. They would like to benefit from the efficiency and for us to be taken seriously as well. And then when you see the likes of the Genius Act and stablecoins being adapted, almost threatening to be a legal tender, not quite, it does help you. But there is another side, which worries me. Imagine, let's see, this is the crash in 2008 happens again. Yes, some would say, no, we have built controls in that. That's a debate for another time. If that happens, what would happen? Okay, people would go to the banks and say, I want my money. Then they will say, hang on a minute, I don't need to go to the banks. I want the stablecoin money. I want my dollar right now because I want to take it out. Because crypto is highly tied into stablecoin, which is because initially, this was meant to be an alternative financial system. Now it's highly coupled to the TradFi system. So as soon as the run on the stablecoin happens, think of the calamity in the DeFi world. As soon as that happens, think of the calamity on prices, even Ethereum and Bitcoin. Think of all the staking and unstaking. So it could be an existential threat if we do not watch what we're doing, because all the stable coins are gearing up to be fiat-backed. The likes of DAI even have USDC as their collateral. So we could well be walking into one without realizing it. It worries me. So yes, centralization, yes, we have built the core ledger is decentralized, but we've built it on centralized ecosystems. And think about it, one of the side effects of this is, just as much as we've seen a certain jurisdiction saying, because you trade with this one, I'm going to put a tariff on you. What is there to stop them? Because you trade with this one, Infura, I want you to do a geolocation and freeze and circle, freeze every stable coin held in this wallet from this jurisdiction. So there is a flip side to the adoption we're gaining. As to how we balance it, I don't know. But we have an issue that we're sleeping on.
Go ahead. No, go ahead.
I mean, one point is just that it is very, very difficult to be decentralized, because if you actually look down the stack, centralization has a much easier job, because if one component is centralized or completely centralized, then the entire stack gets compromised. You have to make sure that every aspect of the stack is decentralized for true decentralization, especially, I mean, if you're looking at it from a technical perspective. So that makes it a little bit more difficult. And then even, stepping back as well, investors might not necessarily have the patience for a project to achieve full decentralization, because that's not necessarily going to be a contributor to their returns. And the simple fact is that if you have project A that is, striving towards complete decentralization, and it's got, it takes a lot more time, and the user experience isn't as good right now, and, it's just not optimal, versus a project that is much more centralized, but everything works the way it's meant to work. Users are going to, unfortunately, most of the users don't have a philosophical leaning towards decentralization, so they will gravitate towards the more centralized project, and then investors will also gravitate towards that. That's where revenues will accrue, and it's a natural law of the market. So I think that decentralization is actually an alternative system that will only be utilized, or the value of it only comes to the fore in moments of stress. And you will only see the value of decentralization in moments of stress. So the world will potentially go through many moments of these stress where they say, oh, wait a second, we have a single point of failure, and the decentralization actually has a value. And then the rest of the time, everyone's just coasting around going like, yeah, you don't really generate us any returns, so why do we care?
Yeah, I mean, we're seeing a lot of funds that have gone from traditional VCs to liquid funds this year, basically just wanting their returns quickly. I think you make an interesting point, Michael. It's almost like we've been saying for a long time, when is adoption going to come? When is it going to come? And now all of a sudden, we've had a lot of legislation in the US. There's push in the EU. The Middle East is ahead of everyone. So it's almost like maybe we're going too fast for our own good when it comes to the two different systems. The whole point of crypto was to be kind of a parallel economy. But at some level, it sounds like you guys don't think that could. One will always at some level depend on the other. The notion of absolute independence or parallelity, if that's a word, can't really exist.
Feels like FinTech 2.0, what we're headed to.
Maybe 2.5. For me, I think this is a false wish, or the wrong wish to hope that we're going to fully move the entire world and everyone is going to be using the crypto tomorrow. This is not achievable. As long as the governments, they issue fiat money, and they want those currencies to be used, and they want to have the control over those currencies, and the users are used to using this. Like, we use euro, we use pounds, we use dollars. For as long as this is the case, we are not gonna see a full movement towards the Web3 economy, parallel economy. And I think the stablecoins, like centralized stablecoins, because we need to remember that there are also centralized services. There's usually one custodian behind it. Centralized stablecoins running on decentralized permissionless blockchains, I think this is a good first step. For me, this may not be the dream that we wish to have years ago, but I think it's a good step to go there. We can start there, and I think this is, as some of you said, it gives efficiency for the users, it gives efficiency for businesses, it actually makes the money more liquid, it makes it faster, and less expensive to send. And I think this is the good first step, and I would fully take this adoption that it's right now and embrace it.
I like that almost as an ending note. They're calling time on us. But as a last kind of closing remark, what do you guys see happening from now till the end of the year? Any big calls, Bitcoin booming, big M&As, anything that you guys want to predict? No financial advice, of course.
I mean, from an M&A perspective, you are seeing people realizing that you're not if there's a cycle, you're not very far from the end of it. So everyone's kind of rushing to get their deals done by the end of the year and make sure that you capitalize on this momentum. So yeah, from an M&A perspective, you will see more from larger investments. It's kind of, it becomes a self-fulfilling prophecy, but it's also kind of like everyone's just pushing on, okay, let's finish it off this year, let's not drag things out into next year. So you will see like that. I mean, in terms of price and market movements and stuff, I honestly have no idea.
Which war breaks out?
No, I'm not following prices, no speculation advice.
No prices, no prices. Okay, thank you guys so much for your time. It was great to meet you guys, great conversation. And I don't know who's up next. Thanks for listening, guys.
Thank you.
Thank you, everyone.
Thank you.